Hey, good afternoon, risk managers. Dan Sugar with TrendlineBreak.com. Coming with my videos on Saturday. Another good day on Friday. In the E-minis, there was at least 5 or 6 really good trendline breaks on Friday. Some early strength. They broke some trend lines to the downside, and then it was pretty much trend down after 10:45, 11 o'clock. Um, I made about 420 after commissions per account. Again, this is just one account. I'm trading 5 funded accounts at Apex Trader Funding, and some micro S&P and some micro NASDAQ. But I was done by 11 o'clock, 11:30. I had some stuff to do, but about 425, 430, 422. Here we go after commissions. So there they are. But one thing I want to point out, folks, that's really important is market breadth today. Market breadth, advances versus decliners. If you trade index ETFs like QQQ or SPY or index futures, stock index futures like micro or E-mini, S&P or NASDAQ, you got to keep an eye on the market breadth, internals. You know, those how many stocks are advancing in the S&P or NASDAQ, how many stocks are declining on a downtick, and it tracks it second by second, minute by minute. And so, but I was long, and I got out of my longs. The high of the day Friday was 45.60 and a half, I believe, or 75. So I got out of my longs 2 or 3 ticks off the highs, like 10 of them. Well, some I got out at 57.75, 58.75, and then 2 times 5, 10 at 59.75, and another 10 at 60. 2 or 3 ticks off the high. Why did I do that? Because after we gapped up and had some strength for a while, let me go to my market breadth chart. Well, first of all, let's see what time the market made its high. The market made its high at what time was that? 10:15. This is the 50-minute chart. So the market made its high at 10:15. I go to my breadth chart. Here's the breadth. Again, I got a couple different breadth indicators, advanced decline. Let's look at this first one. So at 10:15, here's the opening. Or no, that's 10 o'clock. I'm sorry. Here's the opening right here. There's the 9:15 opening. This is a 50-minute chart. So 9:15. But at 10:15, breadth was terrible. Breadth was really bad. And the market's on its highs, folks, but there's more decliners than advancers, right? So for 2, 3, maybe 6 or 7 minutes, it trades around the highs and then it drops hard. And advances are a leading indicator. So very, very important there. You know, there's the advanced decline line. I'm on a 50-minute chart, and the breadth was terrible, even though the market's on its highs. And here it is again. There's 10:35. So there's 10:15. Here's the market made its high at 10:15, and here's the breadth at 10:15. And we opened up in the breadth and went straight down. Okay, so that's why I got on my longs. The market didn't look that good, and then that's why I got on my longs. So here's a couple trend line breaks in here. Here's the first one. Here's the gap up, and then here's the first one for the downside for a little bit. We made a new low by a little bit, filled the gap, bear trap, ran up, and then here's a little wedge right in here. I know there's a little too many lines in there. Let me get rid of one of them. Sorry. But here's a nice wedge. We broke out to the upside, and there's the topping tail, 45.60 and a half. So I got on my longs 2 ticks off the highs on 10 of them, and 10 more at 45.59, 75. And then there's the trend line break, and there's the retest. So we broke the trend line around 45.5650. There's the back end retest. Old support becomes new resistance, and it was trend down. Red, 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 red from 56.50 to 42. 14 points, folks, straight down. Here's one that didn't work that well. Here's a trend line break that didn't work that well. I point out the losers that don't work out as well, and there's one of them. But look how many did work out after that. One more below 49. 49 with a 53 stop, 4 points of risk, and we went from 50 to 38. There's 12 points. If you're short at 49, there's 11 points. Pretty much straight down. Here's a nice little bounce. And then here's one. Again, I know how to use trend lines very good, so once in a while I'll use an anomaly, even though the trend line broke here. If I get more touches, I'll get rid of 1 or 2 anomalies, not 3 or 4 in curve fitting. But if I see a tail like that, an emotional extreme, but I get several more touches on the other lows. I'll take that trend line, and there's a trend line break at 46.5 down to 38. There's 8 more points, a little bounce, and then there's a nice drop, and there's the close. So several good opportunities, but again, market breadth is so important. NASDAQ was also several trend line breaks as well. I was going over my numbers, and July's been my best month since March. So there's about 2 weeks left. But anyway, there's been some good volatility. The bulls are back. We didn't close that strong on yesterday, but here's the daily chart as well. We left a little topping tail. We actually closed lower on the S&P. So here's a strong daily trend line, folks. If we gap down to Sunday night, tomorrow night, or trade below there Monday morning or Monday afternoon or Tuesday, if we get below that daily trend line, then the short-term trend is back down. But as long as we stay above it, the bulls need to prove themselves Sunday and Monday morning to go back up into that tail right there. But so far, we had a new high for the move, a 52-week high, and we closed lower. That could be a key reversal. So we'll see if any bad news comes out or maybe some negative earnings or what have you. But anyway, there's the update. Enjoy your rest of your weekend. And if you have any questions or you want some consulting or my 2-day, 5-hour masterclass and my ebook, I'll put together a package deal, and I have a real good deal on that. So if you want to reach out, Dan@trend9break.com or on Twitter @TLBTrader. Thanks, everyone. Have a great rest of your weekend and see you Monday.